Transfer. Mobile money operators transfers. I mean, that's outside the regular um, commercial banks that we know. For the mobile money operators, they also see there's an increase of about 151% in total volume between 2021 to 2022. NIMS transfer to, that's NIP, NIMS instant payment, also recorded a tangible increase. They moved from there's an increase of about 47.9%, almost 50% in volume. That's about 3.4 billion in 2021. By 2022, they started doing about 5.1 billion. All of these are fund transfer payments being made within the Nigerian payment system. POS2 also saw that surge, although theirs is about 17% increase between that 2021 to 2022. I mean, this is Q3 2024. If we put the data on the table already, you can already see that it's astronomical. We can do a poll and ask everyone in this room, when was the last time you actually punch in your card details to make payments in maybe on an e-commerce store or any form of payment that you made in recent times that you have to really put in your card details to consummate the transaction. So the shift is already happening, and because this conversation for us as players, and not just maybe we have some consumers as industry experts, is to say, okay, so this is where we see things going. How do we respond in terms of the facilities that will provide, as payment facilitators to get people to be able to easily and seamlessly make this kind of payment from our own standpoint, being the service that we're providing in the market. And also, most importantly, how do we position as major player in this space? All right, so I will let Faith takes it away from here. Just let me read our profile to us shortly. So she's a lot humble, so she didn't really give us the full profile in just a short version. Right.
Or maybe that's all. Maybe that's all there is.
So she is an experienced business operations manager, skilled in people management, negotiation, business planning, analytical skills, and sales. Even Faith is a tech enthusiast with a demonstrated history of working in the financial services industry and the corporate social responsibility space. She currently heads operations at OnePipe, also a member of trustee at the Open Banking Nigeria. Please do help me welcome today to this webinar, Yvonne Faith Elago. You're welcome. You're welcome, Faith. Please, you have the floor.
So much. Thank you so much, Michael Adishola. Thank you, Belema, for having me. Thank you also everyone that has joined to have this conversation with us. I'm so happy. Like, I liked the introduction because I was wondering how I was going to, go with the numbers. Like, the numbers were such a mouthful. I was telling my friend this morning that I'm finding that it's like I don't know numbers. How many zeros are billions and how many zeros are hundreds of billions and then trillions? Because, like you rightly said, the data has shown a significant and continuous growth in the industry around, transfer payment options. And I wanted to, as a matter of fact, I put together that number thing. I was like, you know what, this is just too much, plenty numbers. So I'll skip it. So again, thank you so much for helping me with the numbers bit. I'm going to go ahead and share my screen now and just briefly do some little introduction, after which we'll just get into the conversation properly. Give me a second to find my slide. I'm going to share my entire screen. Sorry. Okay. Please let me know if you can see my screen.
I see a beautiful slide. Yes.
I was going to say again that design is not my forte. So I just was like, I can't. I'll either go overboard, it will be too colorful, too plenty, or let's just put together the barest minimum and hopefully we're able to convey the message properly. So we're speaking today about the shift from card to account-based payments. Primarily, it means that we're talking about payments and how we're moving or evolving from one known form of payment into another known and growing form of payment. One of the first things that we should remember about payments that it is a system of exchange where you are giving money, goods or services in exchange for goods or services. Um, it is a system, means that it has things that make it up. It's not in a silo. It involves standards, methods, rules, laws. It comprises of institutions, tools, tenders, and a whole bunch of stuff that make it a whole system. If you remember your basic biology, you would know that your endocrine system, for example, starts with, I think, cells that make up tissue, that make up organs, and then make up the system. And so the payment system is an embodiment of little things that then work together and ensure that you are able to automate or even manually perform payment transactions. Another thing that is evident about the payment system is that it evolves. It has been evolving, and it is that evolution that has just do a small, not as much history class, but just a little conversation around where payment was before and how we got to be here. Like all of us probably were taught in sociology or something growing up, the first means of the exchange that we spoke about is in the barter system, the trade by barter system. One of the things that I'd like, to establish for this conversation is that when we compare card versus transfer or account-to-account payment systems, it is important to note that we're saying it is an evolution. It doesn't necessarily say that cards are bad or that they are obsolete or that they are not useful or they weren't an innovation at the time. It only just says that we're evolving. Like the human race has always evolved and gotten better. One example that comes to my mind again is the transportation system. Just like the payment system has evolved over time. If you think back when man first started, we started walking. To get to places, we would use our legs. Then we started employing animals or using animals to move. That's when you'd have people ride on donkeys, camels, and horses. Then we evolved and then built a mechanical system, something that allowed us and some machine make us move. We'd have bicycles, and stuff like that. Then, in fact, before that, we found a way to make the animals do better. So we had mules and chariots that we could ride, then bicycles. Then we now started having engines, machines powered by engines to help us move, where we have the vehicles that most of us, either own or use. And even that is not terrible. It's a great improvement from riding donkeys. But we are now having an evolution or a transition into electric, vehicles. So we just find ways to make things better so that things, we just like the soft life as human beings. And so we started with a payment system called barter. I'm sure we all know about barter, where you were exchanging something you had for something that you needed, where what you had can be something that in itself is useful. So it can be grains or I don't know, fruit, something that you have that is in itself somebody needs. Or it can be just something that is attractive, like a pearl or a cowrie or a bead that you'd exchange for something else that you wanted. Like when that system worked for a while until it now had obvious challenges. And so it became very important to kind of um, deal with the challenges that the system provided or that the system had. So with the barter system, one big challenge was how do you determine value? Like what says that my 10 bags of rice is the same value as the milk or the eggs or the dairy, whatever it is that you wanted to exchange? How do we know that we're exchanging like for like and that you are not ripping me off? Um, it started evolving into I think one of the earliest records of evolution from barter was with I think bronze as a bar. At first they started exchanging rough bronze, then they started exchanging bronze bars for produce, then they started building coins. All of these, as they were getting better, all had their flaws. For example, someone could exchange a bronze coin for something, but then just before the exchange, you could just chip off from the coin and reduce the value of the coin to you while trying to hold back some more value to himself. And so it now became obvious that this thing that even though we have agreed that this type of coin or this size of coin should be equivalent to this value, it does have some shortcomings. And so how do we change that from bronze coins? We went into iron, silver, gold, and then the challenges continued to exist. I'm sorry, I don't know. I'm sharing my screen, and so I can't see if anybody's hands are raised or if anyone is trying to get my attention. So I'll need Michael to just call my name or just speak out if you need my attention.
We're good. Just you can go on. We're good.
Okay, thank you. So when the barter system started to fail, it became obvious that we needed some standardized way that we could recognize value where the identified shortfalls or flaws of the barter system could be tackled. And then the currency was bettered, where you would agree that this did not have, you would have an agreed value. You decide that 1 naira means this is what this note means 1 naira, and 1 naira can buy you X. And you can't tear from the tip of 1 naira and say, okay, it's now 75 kobo. Anyway, we know about the currency. Then we now had the issue of people carrying cash about. You just, every time you wanted to buy stuff, you'd carry all the cash that you needed for the exchange. Remember, we said it's an exchange. So this had to be solved for. And so we now started having bank transfers where people would come and a system was built that allowed financial institutions communicate with themselves, where they're able to move currency between individuals and businesses without having to carry loads of cash with all the attending risks that we're all aware of. With bank transfers, in the season of bank transfers, we also had checks as a legal tender. Think of it as a voucher that carried an instruction that was able to move money between entities. I don't know if anybody on this call was, I don't say alive, or was aware of the time where, or even ever wrote a check. I mean, now I think most people now do not write checks, but I don't know how many of us in this call ever wrote a check, like had to sign perfectly. So this, while it was an improvement on the barter system, improvement on the era of carrying cash up and down, had their own flaws. So you'd have to walk into the bank to give your transfer instruction. If you were giving someone a check and didn't want to walk into the bank, he would have to go into the bank to clear it. The clearing period was astronomical. It started from like 21 days before your check gets cleared. You can wait 21 days and the check comes back bad because someone signed it wrongly. There were risks around fraud, forgery, signature forgeries, and the likes. And then we came into the era of electronic banking, which is kind of, well, we're slightly ahead of that era today because we're already in the blockchain cryptocurrency phase. But we are now in the era of electronic banking where you are able to transact electronically. You just hold a device, your phone, your laptop, and you're able to move money without having to walk into a physical bank. The cards and the bank transfers all are operational in this particular era. Before bank transfer became a thing, the cards were a thing. And like you all know, you would have to have a physical instrument in your hands with which you would transact. This had its numerous risks, which we'll discuss in the coming slides. But then again, as we evolved, we now moved into the transfer and even APIs where you're able to embed financial transactions in traditional businesses, allowing traditional businesses to offer financial services to their customers. It's kind of where we are right now. I think I'll just take any questions at the end of this. So let me quickly run this through. They're just 7 slides. I'm trying to find a simple diagram to just show us how cards versus transfer payments work. And it's pretty self-explanatory. The first one here is a flow for a typical card transaction, which has 6 steps. While the one beneath it is the flow for a bank transfer transaction, which has less number of steps. So for a card transaction, a customer goes to a merchant's website or platform to make a transfer, then the dancing about or the bouncing around begins to happen. The merchant will send the details to the acquirer. The acquirer will send to the card network, whether it's MasterCard, Visa. The card network will send the transaction data to the issuer. The issuer will go back to the acquirer and also go back to the merchant before a transaction is successful. So for a card transactions, the failure points, like you can see here, are quite many. So between the merchant and the acquirer, between the acquirer and the card network, between the card network and the issuer, between the issuer and the acquirer, all of these have to be perfectly in sync before a card transaction is successful. For a transfer transaction, I'm using NIBS as the switch or the person in between. It is between a sender. So a sender takes his, let's use the phone here. A sender takes his phone and does a transfer. Money moves from there to NIBS, for example, and NIBS sends the money to the account of the customer he's trying to send money to. So assuming I was trying to send Michael some money, he'll give me his account number, I'll send it. There's just a communication between my bank, the source bank, and his bank, the destination bank, with one entity in the middle. And meaning that there's just this one failure point. If the transaction fails, it is between me, the person in the middle, and his bank or him. I won't go into the numbers, but I will just show the trends over time. I couldn't find a more recent diagram, but this one says, this is from 2012. There's a thin line under here, I'm sure you can't see. It is for check transactions. So there's check transactions from 2012, between 2012 and 2018 has been flat. A few big people will always transact. A few organizations are just there. There are some people, I think my dad will still really like to use his checkbook every now and then. Then you have card-based transactions next. And then the highest here is transfer, NIP. Okay, so we have bank transfers, two types. We are able to pull or push money using bank transfers. Where push is the one where you take your phone, you originate a transfer, and you send money to someone's phone. Like in the example between me sending money to Michael, it's a push transfer, push type of transaction. A push type of transaction is one where I give you my account number and you come in and take money from it. So these are the different ways that you can take money from your bank via bank transfer. Okay. So why is bank transfer positioning as the evolution from card payments? I think, first of all, is that the card payment as an official and a widely used mode of payment existed before transfer and was kind of established, especially for payments. Before now, if you wanted to make payments 3, 4, 5 years ago, you just default. If you wanted to go to a merchant to make payment online, card is the thing you will see there online. But today we have transfer, and it seems to be advertising itself. One of the products that I manage at One Pipe where I work is a bank transfer payment option that every time we turn it on for a merchant to test, like when we are done with integrations and we're trying to see if everything we did was great, we tested it in the test environment, everything was fine. Every time that we need to test it in the live environment, we do it in the middle of the night because we don't want, I just want to, me and my colleague just do a few quick transactions and see whether it is well, turn it off, and then decide on a proper go live date. Every time we have turned this thing on in the middle of the night, we have seen customers will just log into the merchant's website and say, oh, there's a bank transfer option. And in 5 or 10 minutes of our testing, we have seen quite a number of users use that payment option to, make payment to the merchants that they are trying to purchase the service, the desired service from. And so why do we think that the transfer payment option is posturing or positioning as the evolution of card payment? I would say, for one, it's because it has a wider reach. I have an uncle that has never owned a debit card. He worked with government, had a lot of money, and was just really, really afraid of the concept. Just the fact that if somebody gets access to this plastic in my hands, I stand the chance to lose a lot of my money. Never sat, well with him. And so he just never had a debit card. And I know a few people that don't have debit cards. I'm one of those persons that rarely have a functional debit card part-time. I also am one of those persons that goes out most of the time with just my phone because I believe that everything I need is on this phone. So I'm just going to talk through why it is great for the merchant who is receiving payment and why it is great for the customer. Then I will highlight a few of the issues that the card payment system has, which is part of why people, both merchants and business and individuals, are gravitating towards a transfer payment option. So for the merchant, is wider reach. If you have a website or whatever and you ask people to pay for a very long time, if all you have is a card payment option on your website, you have disenfranchised me, for example. because I had this card that I'll just never get the OTP from the bank, and so I could never buy online with card. You also disenfranchise people like my uncle and in the older generation that do not own cards. You disenfranchise the people that are very afraid of putting in their card details online, who have a justified fear for Yahoo boys and cloned websites, and stuff like that. Another reason why it is great for the merchant is that you can embed banking into your core business offering, which is why you see a lot of people these days having wallets. You go to a Jumia, you go to a Konga, you go to any of these payment e-commerce platforms, you go to a lot of these businesses, and they want to be able to give you a wallet account. They want to be able to embed banking into their core offering, and so give you an account where you can fund it, do a transfer into that account so that you are able to access their services. Historically, and for the people in this room and industry people, you would know that the cost of card transactions is significantly higher than that of bank transfers. Whether the merchant is bearing the cost or he's passing it on to the customer, it's a significantly higher cost to carry on if you are going with the card transactions. It is almost always a percentage of the transaction value, and sometimes with a cap, sometimes without a cap. Another reason why businesses would like it is because of its instant settlements features. It means that a customer can pay you now and you get your money now. Whereas if you use this card, then you would get settled at T+1 in very, very good instances. You also have less occurrences of chargeback. Somebody will not, it's very unlikely to come and have paid you via bank transfer and come back and say, hey, somebody stole my card and I didn't authorize that transaction, even though they have taken and used up value. It is great for the customer because it generally aligns with the customer behavior. Today, a lot of us are always on our mobile phones, and so we're able to do any and everything on our mobile phone. Someone says, pay me for this, you can just quickly default to your mobile phone and do your transaction. It has clearer resolution pathways. If your transaction failed, you can see it instantly. If you are debited, you can tell instantly. You have a receipt that you can show. Like, you can just always know whether your bank is frustrating you, or if the merchant is owing you, or if the merchant needs to talk to his bank. The resolution pathways are really clear because the transaction dynamics is straightforward. Also has clearer transaction status. You can just see instantly that your transaction was successful. The things that I have outlined as the updates that think of it as version payment processing method version 7. We assume that they have been 6 before, version 9, they have been 9 before, if they have been 8 before. What transfer is trying to solve as an issue that is prevalent in card transactions is one, fraud. I saw somewhere that the fraud value of card fraud transactions in Nigeria for Q1 2024 is about 1.7 billion naira. There's also chargebacks. This chargeback can be some of the times is fraudulent, where a customer uses value and comes back to say he didn't. And some of the time it is also a fallout from fraud. Somebody took your card, somebody accessed your card and was able to make transactions that you did not authorize. But because he had that plastic, he was able to move your money. Another thing is the multiple failure points. In this transfer, there are inter and intra-bank type transfers, where inter-bank transfers would require a middle person, and intra-bank transactions are really Like they are the most instant um, and successful transaction types. I don't know if anybody here has ever interfaced with M-Pesa, the Kenyan uh, almost universal mode of payment. One of the things that makes M-Pesa success rate almost 99.9% and so widely accepted that breaking into Kenya with another mode of payment is looking really difficult is because it is, think of the whole M-Pesa as an intra-bank transaction. Imagine that you're sending money from an access to access bank account. It almost never fails, except Access Bank itself is down. And so the failure points for card transactions are more because you have the card network, you have the issuer, you have the acquirer, you just have all of these things in the middle. Then the failure rate is also really high. I checked today and I saw somewhere that 60% card transactions had a 60% success rate, meaning there's a 40% chance that, or 40% of card transactions just fail. And the drama for reversing, I know some merchants that if you reached out to them, you made a payment to them and it failed and you used your card, they would ask you to give them 30 days, 30 working days, because there's some working back that needs to happen to find out, where the failure was from. There's follow up with, the switches and all of that to make sure that that happens. And so the high failure rate really leads to the last one that I itemize here as an extended resolution process, because again, there are multiple entities that and multiple entities and touch points that power card-based transactions. So at the end of the day, transfer is picking on the ineffectiveness and the issues that card has and trying to improve on it, just like we have seen over time in various other systems. There was a time that if you were going to go to another country over the seas, like the reason they say, oh, you have gone overseas is because you would like get into a big boat or a ship and travel for weeks and months. Somehow that has been done such that it is a matter of hours and days at the most. And so just like the what was being improved upon was, speed, comfort for card versus transfer. It's security, it's ease, it's success rate. I think I can pause now and then we can continue the conversation. It would be interesting if nobody was hearing me.
Awesome, 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 awesome. Thank you for taking us on that journey. Yes, it's very, very interesting. Listening to you share along that line. Yes, thank you. And you highlighted a number of things, and I tried to gather my thoughts. So, card payment system has evolved long before fund transfer did. I mean, I remember NIP started 2011. And of course, prior to that time, we've already seen payment card payment system already evolving. Of course, it wasn't a big deal. I think Paystar came around 2015 or thereabout, but long before fund transfer system itself evolved, because even the facilitation and the heightened of that system in the Nigerian payment ecosystem didn't happen so much until the fintech start coming into that space. It has all the while been existing. The commercial banks have been sitting on it, But once start having the influx of the mobile money operators, when people like Paga step on the scene, when people like I think Paga was the earliest we had then as mobile money operator. And then later on, we start having Money Point, the agency business kick off. I think the agency business also contribute majorly to the tipping point for fund transfer system in Nigeria. Now, so you highlighted a number of things on card system, the high vulnerability to fraud. That's the thing that had belabored that system. The payment processing complexity, you have to route from acquirer to issuer in the loop. The scheme also have to be in there. Unlike the fund transfer where it's just leaving the issuer, which is of course the account owner, to whoever the beneficiary bank is. So it's quite simple. It's end to end. Unlike for card payment system, where we see you have to go here and there and here and there and here and there. But even for the fund transfer system too, three things were highlighted as there are many, but that stands as the major bottleneck. Maybe I wanted to speak to that yet before I ask my the major question I want to ask on this. So the for fund transfer, we're seeing the issue around network connectivity. It's a thing. The rising transaction fees. Of late, we've seen issues here and there, and the rising transaction fee is also tied to regulatory orders, where some form of revenue generation moved by the government. Like of late, we see the MMO also implementing having to pay 50,000 when you're doing a transfer that is above 10,000 naira. These are things in the loop that is also affecting it. Fund transfer. We have issues around data privacy, and fraud is still a thing around KYC not being properly tied together. I know if you want to speak to some of what's next around fund transfer.
Yeah, thank you very much. So you mentioned technical
network connectivity, pricing transaction fees, regulatory orders, and data privacy.
Yeah, regulatory and data privacy. So that data privacy, I find it very interesting because I remember I was speaking to someone from years ago, maybe a year and a half or so ago, about M-Pesa. I find what they have done in Kenya quite interesting. So I was speaking to someone, some industry person there, and I was like, what are the main, like if someone wanted to break into that market, what does he need to bring differently? And they said one of their biggest problems is data privacy. And I said, oh, tell me more. And he said the fact that the sender will have access to the receiver's details. I cannot solve that problem for you. I can't solve that problem. I can't solve that problem for you because today, if you gave me your account number to send you money, we would need to do some sort of lookup, and then your details will show up. And so
Details
I don't
around
see
what kind of details? Address, date of birth.
No. So for the funds transfer transaction, it's just your name. It's just your name. The name of the account is what you have when you do a lookup. So just picture the last time that you sent money. Someone gave you his account number. He probably gave you his account name so that you validate. Do you get? And so when you impute the person's details, you want to check that that account number is actually the account number that you are supposed to be sending in. The account name is actually the recipient you're trying to send money to. Exactly. So I don't like to see that particular scenario as much as a data privacy breach as it is even a security feature, because you need to be able to know who it is that you're transacting with, which is why when you have the CBN is clamping down on all these wallet systems where a person can log in with next to no KYC, create an account without linking their BVN and give the account a random name. So imagine that someone is fraudulent and so he doesn't want you to know. that it is your, let's say your neighbor next door is fraudulent. He's trying to get money off of you, but you need to send him money through an instituted, proper channel. If you try to do a transfer to that person, if the person uses some wallet thing that is not properly KYC'd, what you'll find is that he will give you the name of a proper organization of a stranger you don't know. But if that system was properly done, his BVN linked, it will show you that it's not Lagbaja, my neighbor's full name I'm seeing here. It will make you pump your brakes. So what we are interpreting as data privacy violations for funds transfer, I prefer to see as a security feature. It is important that you know who you sent money to.
Yeah.
If I want to make a claim in the police station, I want to be able to say I sent it to Charles Adeshola. That's the person I sent my money to. But if I can't tell, then it's a number. Oh yeah, now how do we start to decipher what this number means or anything?
Yeah.
So that's what I think about the proposed. Maybe there are ways that you can identify the person without having their full government name. But for now, I choose to see it as a security feature as against a data breach.
Okay.
For regulation and fees, I think that we can all agree that the cost of doing business in Nigeria is skyrocketing. Like the country is in some sort of economic crisis. The government is leaning heavily on taxation, and so businesses need to recoup. But that being said, the cost is almost always less than card transactions. It's almost always like the average when people charge you for transfer, whether to send or receive, let's say to receive as a business, which is the same use case for cards. Average fee, if it is not a flat fee, even if it is percentage, it will be capped at 100 naira, whereas card is 152,000. So while it is more expensive because a business is now built, businesses are being built based on it, it is almost always cheaper than the card transaction. Hopefully, maybe in the future, when the government release legs from people's neck and businesses are able to, then competition will force people to drive down costs. Do you get competition? Right now, if you see that it is rising, is because if I'm charging 100 naira, you are charging 100 naira, that guy is charging 100 naira, we all charge 100 naira and be going. But by the time cost of doing business comes down and people are, like the economic climate is a bit more favorable to everybody, I can decide to charge 15 naira, and you run and charge 15 naira because I will begin to attract, your customers.
Okay.
For fraud, I tell, so in my day job, I have, enthusiastic people trying to build solutions and access APIs so that they can power payments. And one of the things I tell them is that, you see these fraud boys, they are busier than you. They are more hardworking than you. So whatever solution it is that you build, they're out there looking for loopholes. They're out there really, really trying to get away. So I don't know that fraud in the entire financial, maybe in a few years from now in the future, I don't think that fraud can be completely eliminated as an issue with transactions. But what I know is that the prevalence of it in comparison to card is relatively less. For example, I was sitting in a bus the other day. I just gotten my credit card. I had, set it up and everything. And then I realized 30 minutes into the ride that my card was here. And Oyibo card, you don't need to put PIN. And everything is on one page, unlike Nigerian cards where your PAN and your expiry date are in front and your CVV is in the back. Oyibo card, everything is right there in the front. And you don't need to put, and it was just right there. Gosh, I felt the strong need to call the bank and cancel the card because that exposure alone has put everything in that account at a risk. But for transfer based, before somebody can impersonate you and take your money via bank transfer, that person must know you. Either that or you have carelessly compromised important information about yourself. You get. So if you have access to my phone, for example, you need to know my code to be able to enter my phone. When you enter my code, you need to know the password to my internet banking before you can enter it. You need to know the password to authorize a transaction before you can take money out. Do you get? If you try to use USSD, you need to know the password. So, like the security measures in place are so much more. For some people, you need to have access to my phone and my OTP before you can move money out. Unlike the card where all you need to do is put your details out there. So while it doesn't obliterate fraud 100%, the hurdle is higher, which is why the fraud cases are a lot more with card transactions. For network, I think that considering that we are a relatively developing country with where we have network glitches here and there, that'll probably continue to be an issue for a while. But I know that it will just continue to get better with time. There was a time internet was not this secure. You couldn't have a call like this. Like our connectivity was not this great. So it would only just get better. So for connectivity, I don't know. I don't know that it is as much on the payment system of bank transfer as it is on our infrastructure that should power that payment system. You get what I mean?
Awesome. I think you checked out on all of them one after the other. Yes, thank you for that response. Now, so the big question for me is one and please for people in the audience, I think after this question, if you have questions, we'll be ready to feed them. This is probably the last one I'm going to ask. Right. So one edge that card payment system C has over fund transfer is the global acceptability. I mean, I can take a Visa card and use it on a merchant site in Asia or one in Europe or North or South America, unlike the fund transfer system, which is the major struggle today. I think the best we still have, apart from the Western Union, the MoneyGram of this world, is Swift. And that's not even instant and is mostly developed for the commercial banks. Now, so we've seen a number of players sticking their neck out to see how to drive um, online remittances, worldwide remittances. Data has still shown that there's still a lot of space in there that people have not even taken, largely because of regulatory and infrastructure limitations. Right. So I'd like you to speak. So how can fund transfer payment solution pass that test of globalization? How do we thrive it in our ecosystem?
Okay. As you're saying, I remember that it's not only global acceptability. There's also the concept of recurring payments and also the framework of credit that developed countries have built and baked into card payment options. So I'll start from credit. Just to say that again, card transactions in itself was an optimization and was a great thing. It's so great that economies were built on credit. Like today, businesses in developed countries grow with credit. Individuals live on credit, and most of it is on the card infrastructure. Then there is the concept of recurring payment for things like subscription-based payments and stuff like that, where you are able to just put your card details somewhere and say, on the 5th of every month, come and bill me for this and let's move on. Let everybody be happy. And then global acceptability. I'd say that for global acceptability, the problem is regulation. And that same regulation is because of the fraud that has been identified in the card one. Because it's regulation moving money across borders for now will continue to, at least in the immediate future, will continue to have serious scrutiny. Government, people want to ensure that people are not financing crime, are not financing terrorism, fraudsters are not taking money across countries and all of that. So I think that for that one, the problem is regulation. And I believe that it is being tipped at, like, products that solve for this are being built even as we speak. It's just that they have not been as mainstream as we know cards to be. I know of businesses that would allow you open wallets for, you be a Nigerian business, you have a wallet or an account with them where you're able to have fund your Naira account, and they are able to give you money in a USD account so that you can move money around. Do you get?
Okay.
So there are things that are being done. It's just not as mainstream as card yet. And even that card is so expensive. Once chargeback hits, it almost doesn't make sense for businesses, especially that chargeback comes with fines as well. And so what I know about this is that it is being carefully crafted. It has to work with regulation, and it might even look worse for us because we are in a kind of blacklisted part of the world. As of today, I engage with, banks, international banks, looking for product partnerships. And the response is, oh, sorry, we don't do anything with Nigeria at the moment. We don't do anything. We can't send money to Nigeria at the moment.
Sad.
So there are things that, yeah, very sad. There are things that can be done. There are products. I know that this global acceptability problem, I don't know that it's that much within the EU, for example. Do you get? Once there's a trust between the entities, once there's the government or regulation allows it. So it's work in progress for global acceptability. For recurring payments, I think that we're almost there. NIBS has done this direct debit product that now makes it possible for customers to be able to use their account numbers to be able to power payments. You get KYC, you provide a code, and you're able to say, take my DSTV payment for the next 1 year, for example, from my bank account. And so that's another niche of the card payment that is somehow that the bank transfer payment option has now come into. And because it will have less fraud, less, be more secure and all of that, in very little time, it will go to be one of the ways you just, set up your recurring payments. For credit, that one, I think it will also be based on regulation. Like the government will need to begin to build frameworks around credit scoring. I've had people try it. It's an expensive venture. It's easier when the government is with you on it, so that we build, infrastructure around it. Interestingly, the credit advantage of cards is not one we have in this part of the world. So hopefully our government will consider like holistic payment options that we have as we begin to build things around credit scoring for just general living and growing of businesses.
Awesome. Awesome. Okay, so there's no much hope in that direction because whatever we have to leave on the government table, we just hope that it happens anytime soon, right? So, but like you said,
Don't be
it's the space
pessimistic.
of it. You said,
Don't be pessimistic. Don't be pessimistic. Don't be pessimistic.
oh,
Who knows?
no, I'm just, I'm, well, I'm not an optimist anyway, so I don't
Okay.
no,
I
I'm
am.
not an optimist. I'm a realist much more.
Mm.
But yes, thank you for that response. Let's hope it comes by eventually. Yes, let's ask people in the room if there are questions for Yvonne. Anyone? It may not even be a question. You may just want to contribute to this conversation. Please just raise your hand if you like to. Just raise your hand if you like to. Okay. I see Oluwatosin Adile. Please do go and ask a question, sir.
All right. Good afternoon, Yvonne. Good afternoon, Mr. Michael. Thank you for putting this together. Yeah, I've learned a lot from the discussions and all that. So I think personally, I'm usually more interested in transitioning and shift. I think more about transitioning. So most times when I see an existing system, I'm always looking out for where is this going to go to, where is this getting into, and all that. And if we observed also from um, how currency thing came into being, from what she said about barter, trade by barter coming into currency, and then from there the payment modes, began to change and all that. Okay, and one of the things I think um, was actually responsible for the shift from trade by barter to currency was volume, market activities. Yeah. So the market activities began to grow. People had a lot to do to trade off, and that people who doesn't have that much to that they need. And I think that might be one of the major reason that brought currency into the picture and all that. So I just wanted to know if um the market drive is still something to consider, because I think presently all the what's it called, mode of payment that we have can actually cover that. I don't think there's any volume of transaction that bank can handle right now. Okay, but I just wanted to know
Mhm.
if the market volume is still a factor to consider for a shift in mode of payment. And I also know that right now technology is a major drive in how things are going to pan out eventually. That would determine whether there's going to be a shift from what we have presently or not. Okay, so I just want to know if there are indicators that you already know that could be a factor to the next shift in mode of transactions, payment mode of transaction. So I just want to know whether there are indicators, are there pointers that are showing that there is burden on the present system and there might be a need for a new kind of payment system. Yeah. Thank you.
Mm.
Thank you.
Thank you. Thank you very much. I agree 100% that market volume uh, was a driver for transitioning from trade by barter to just a currency. I mean, imagine me needing um, a thousand crates of eggs and needing to exchange it with a 5,000 gallons of milk or dairy. So yes, volume was a driver. It just became one, very difficult to ascertain what value meant, and two, like just the stress of giving you what I have so that I can give me what you have. I think that the strongest indicator for the current shift is security. As Michael asked, he said, fraud is still a thing, is security. A system that can be fraud proof, it would be the next thing. Like we have all agreed on this call, while it is easier for me to lose money just because you stole my card, you got access to my PIN, whatever it is, you stole my bag. Like there are just so many ways I can lose money on card. There are also ways I can lose money on transfer. You can do some phishing thing, call me, ask me, so for personal data, and I give you important data that lets you access my account. So a system that will be fraud proof will be, I strongly believe, will be an indicator for the next payment mode, whatever that will be, something that will be fraud proof. Because fraud is the prevalent, it's just that big thing that everyone is struggling to to tackle, whether developed or developing countries. I saw somewhere, I think they said in Europe, was it last year or something? I don't remember the numbers, but some large amounts of billions, like tens of billions of euros lost from fraud, in that particular year. So that is an indicator. You have central banks doing trainings every day. You have institutions insisting on, communications and trainings just to make sure that people are able to, one, build systems that are fraud proof and educate people such that they are not gullible or, for fraud. So fraud, I think, is the current indicator, is the one that is pressing everybody's neck. And the next best thing, the next iteration would be around minimizing or completely obliterating fraud. There may be more, but that's the one that I said, that's the indicator I see.
A fraud-free system. I agree. I agree. A fraud-free system.
Thank you so much, Ugo. Thank you.
That's, in fact, there's nothing as scary, even as operators. There's nothing as scary as a fraudulent attack on your system. Something that get everybody edgy every day. Sometimes when this thing comes, it comes in high volumes, unthinkable high amount of money. I mean, thinkable.
Yeah.
Yeah,
And the evil part is that as processors or providers of the service, they'll hit you so hard you can't publicize, you can't shout too much, because it then means that your system is not
confident in your system.
Exactly.
Yeah,
you can't shout. You have just been hit with billions. You hear about a fraud incident in a bank from a banker. I said, how come? Because you don't want people to withdraw their money in panic. You don't want people to think that the system is not trustworthy. But then, and it's like it's one of the things that keeps people up. And I told somebody that if I ever leave fintech, I will not come to fintech again. Like, there could just be fear of fraud. You've done everything. So
fear of fraud. And I've seen that thing. I've seen it ended people's career in one day. I've seen it ended systems in one day. I've seen it send brands go home in a day. So yes, great. Do we have any other questions for Yvonne as we begin to close this? Okay, Ogiva Oyegun. Hope I didn't murder your name. Please to go ahead and ask a question.
Yes, thank you for the session, Yvonne, and thank you, Michael. So I just wanted to know, in this, in the era we're in, a lot of people are talking about this transition to blockchain. So in my mind, I'm thinking, if we're all talking about blockchain as the next big thing, how does that relate, or how is it going to be married together with the transfer? Since you're thinking that, okay, it's meant to be quicker, secure, and decentralized. So if we're going to be moving to that, how do we combine? Is it possible to combine the two, or are they just going to be two separate entities?
Okay. Yeah, maybe you want to take that.
Sorry, where's my camera? So the concept of blockchain, while I agree, I strongly believe that with all the Gen Z people that it is the next big thing, it is really not exactly very clear to me. Maybe I'm a bit traditional in my thinking, but I know that for it to function in the financial system, there must be some sort of interoperability. Somebody help me with that word. I must say.
Yeah, you're right. Interoperability, yes.
Exactly. So I know that there must that must exist. That must exist. But yes, I know that blockchain is in the future. I believe that but it won't function in silo. Remember, we said that payment is a system. You have to be able to it will have standards, which is why today we're talking about API standards, open banking, whatever it is. It may not function 110% in silos. So I don't know very much about the concept of blockchain. I keep telling myself that someday I'm going to do some deep research, but I just know that there will be need for systems to communicate, and it will not just be on its own.
Okay.
Yeah.
Thank you for that. And if I may add to it, right? So first off, if blockchain is going to see the light of the day mainstream in our ecosystem, the policymakers need to first catch up with that. And I think is one of the critical challenges that we are still having. Yes, the technology has a flavor of a security system that can help us to check fraud in a very definite way. However, the policymakers have not catch up with. I mean, we just came back from an era where they literally banned crypto trading, where you were not allowed to do it. If they smell anything in your account, say crypto of any form, we all know how that story goes. So the policymakers, if we're going to see any innovation mainstream in the payment system around blockchain, the policymakers needs to catch up with it. And that's if we're talking about the currency system itself. However, if it's about the technology, I think today Amazon is already playing around that technology, some sort of decentralization, wherein authorization is everything is open to everyone, right? And but so that we don't go back and forth on this, I think first off, if we're going to see major traction on blockchain payment system in Nigeria, the policymakers need to catch up with that. And of course, we need to have more adopters even among those who are making payments. I hope that makes sense. Okay, good. Thank you. Right. I don't know if you have more questions. I have maybe one more wrapping up before we begin to close. So even I like to have your thoughts on this. Of late, we've seen a lot of new entrants into the fintech payment system, and we had a lot of people say all these fintech people are not even too much. So, in your estimation, will you say our market is becoming saturated?
I don't think so. I don't
Okay.
think so because we're still financial inclusion is not at 100% in Nigeria, for example, yet. Do you get? We still have a good number of people that do not have access to proper financial services beyond an
I'm
account.
taking your thoughts there. I'd also seen someone argue that financial inclusion in Nigeria is now a fallacy. That those who are not financially included yet, do they have the will to or to not to? Because it seems the system is already getting to them. They just decide not to catch it on. Maybe just figure that into what you're saying.
Okay. So financial inclusion, like actual access to banking services, is not just putting your money in a bank account. It's supposed to be
Yeah.
access to savings and credit. You get savings and credit. And I don't know, maybe it will be financial inclusion and literacy that will need to go hand in hand, but I don't know a group of people that would say they do not need credit, either for daily living or for
Business
growing
purpose.
their business. Exactly. So I think that we are still financially excluded. Why it may seem like there is an oversaturation of fintechs is because we are now all struggling for the same customers in Lagos and Abuja, you get, and Port Harcourt. In the cities, very few people doing the hard work of building systems to capture a niche customer base. Do you get? So I think that I would argue that financial inclusion is not a fallacy, because what we are offering people is just the one that is the one where you don't put too much skin in the game. They should give you your money. When they want it, you give them back. Do you get? But actual banking services includes credit as well. And I don't think that we have gone that deep in. Like I come from a proper village. My parents live there, Bagajaga. So I don't know that there's anybody out there giving them loans, but I know that there is Money Point and OPay and PamPay with accounts for them. There's no bank in my village. Do you get? So I think that why it looks like there's a saturation is that everybody is out here trying to compete with PamPay, OPay, Flutterwave, and Paystack. You know, for the same me and you on this call. So me and you probably use all the services of all these people. But then there are people, the actual excluded, where they are either completely excluded or not fully serviced by the financial system. There's that number of people. And I think that if products and systems are being built to cater to them, there's value to be captured as well as value to be given.
Awesome. And you feel it's sufficient enough to sustain volumes and keep the business operation running, even in those regions?
Oh yeah, absolutely. Those regions, there are farmers there. Like if you come to my village, if you use it as an example, we are a farming people. You know, we sell our stuff. We require fertilizers to grow our crops. We require. I mean, if I know people that if they could have access to credit, they have the land. Like they have so much land, they can't steal that land within a 1 year period. They would require some sort of mechanized, farming, but they can't access it because they don't have access to credit. So it is very important that if they had access to credit, they will begin to do turnovers,
More.
that will sustain businesses for those people. They are there. There are people there that farm, that will need to be able to put their children in school, that would appreciate a system that would pay their children's school fees until they harvest, stuff like that. So, yeah,
You've answered,
I think so.
it. If they are enabled, more things begin to happen in those areas. Wow, I think you've exhausted this conversation. I don't know if there's any other person who want to ask a question before we take you on closing thoughts. Anyone? It's been an interesting conversation, and we would like to begin to close from here. Okay, so Yvonne, it's really been interesting listening to you talk about this, and I've had to write down one or two things from the things we've shared. So personally, to have learned one or two things. Yes. So let's have you closing towards yes, both on an organization level as as service providers, and maybe also as individuals in our own corporate space contributing to the ecosystem. Please take it.
Thank you very much. So in closing, I'd say that bank transfers as a means of payment is indeed here to stay. I was listening to a podcast some days ago, and it was someone in the US saying how that by 2027, they believe that, instant transfers, ACH pools and stuff would account for nearly a quarter of the transactions in the US. That is huge. And I'll tell you why it is huge, because the average American does not spend his money. He spends credit. Like his money is in a credit card, because it is that credit card that determines whether or not he can rent a house or buy a car. It's the value and his loan score, his credit score is what determines a lot of things for his quality of life. And so they never really send money. They fund a credit card and then spend from there. But that we're in a place where that society that has been built in that way is going to, like, is migrating 30% towards this mode of payment says like a real lot. So I'd say that as people in the industry that build products and services that power payment, one of the things that we should be careful and mindful of is building systems that are not susceptible to fraud. I haven't been here for like a few years now. There are certain scenarios that when people are trying to integrate, I say, have you looked out for this, this, and this? Because their scenarios become known, and as they become known, we should just begin to build for them to make sure that there are no vulnerabilities that can make the system really just untrusted, to both the merchant and the customer. So yes, it is here to stay. We need to just, but we would also and should also be open to iterating on it, just making it better. As vulnerabilities are found, iterating and making better. So that at the end of the day, we have as close to a secure system, as close as we can get. Yeah.
Okay, awesome. Thank you so much for that. I asked for two. So you've spoken to the we are service providers, and I mean as individuals contributing. You've been there. I mean, you're head of operations. Some things have contributed to your journey. Maybe you also want to share a closing thought on that.
So not about transfer.
Yeah.
Oh, okay. Yeah, okay. So as an operations person, what has contributed to my journey? I feel like understanding your role and internalizing it. Just understanding what it means. I was having a conversation with this young man on LinkedIn 3 or so days ago, and we're talking about what it means to be a business operations person. And I said that it can differ based on the industry and then the actual organization. So understanding, internalizing it, and just making sure that whatever that means, you make it happen. So for me, I understand that my role is to make sure that my organization does not die. And you can imagine how that sounds like a vague thing and also means a lot of things. So making sure that my organization doesn't die means that making sure that we are not bleeding money, we're not losing money to fraud, we're practicing and we're not running the business in a way that we can get sanctioned, lose your license. Like there's so many things that can kill your business, lose your employees, lose your best hand. So there's a bunch of stuff. So understanding that, internalizing that, and then working every day to make sure that this is whatever you have set as your goal is what happens. I told the person that being a business operations is like one of those thankless jobs. Nobody knows what you are doing until something catch fire. It's like the building catches fire. Nobody knows that. The guy that goes round and turns off the lights. We have told everybody, turn off light, nobody hears. But the guy that goes round to turn off the light every evening, make sure that he heaters and whatever is turned on is turned off. They think that, well, what are they paying this one to do? The day that the building catch fire, then you know that that person's job is important. So while it's a thankless job, just understanding it, internalizing it, and just making sure at every point, whatever it means, whatever you have understood your role to be. So when they employed me, they say head of operations, you get. But it involves talking to regulators, making sure that our licenses, our certification, making sure that finance, making sure that people, like all of that is working as it should be. So for me, the journey has involved understanding, deciding that this is what it is, and then, getting down to do the job.
Wow. Awesome. That's powerful. That's so
Thank
so
you.
powerful. Thank you so much for having this session with us. Yvonne, I think
Thank you, everyone.
we can wrap it up here. Thank you for your time. And yes, everyone who have
Thank you.
joined in, yes, do help me celebrate Yvonne. You can hit clap.
Thank you, everyone, for joining.
Just let make welcome. And yes, we will be in touch again. And yes, thank you.
Thank you very much, everyone. Thank you for having me.
Thank
Bye.
you.
Thank you, everyone.
Svi, you can take it away.
Yeah, thank you so much, Yvonne. I'm so grateful. Thank you, everyone that has joined. I hope that we learned one or two, and just to say, because I naturally would defer to even the payment, the transfer system method of payments. It just comes to me naturally. So I hope that as we grow in this ecosystem, we also have been able to pick one or two lessons, one or two insights, and that would help us grow along this journey and in our different career sites, so path rather. So thank you very much, everyone. We hope to see you in the next webinar. Thank you so much, Yvonne, for honoring this call. We're really grateful. Thank you so much. All right.
Bye.
Bye, everyone.
Thank you. Thank you, everyone. Bye.
Bye.